This conference will now be recorded.
Good afternoon, ladies and gentlemen. It's Cludesay Trading Frank. It's approximately 6:13 p.m. on a very rainy afternoon here out on the waterfront in New Jersey, overlooking New York City. That's where we are. Today is February 28, 2021. As I said, 6:13 p.m. Eastern Standard Time. This is a new and recent member ACS advanced coaching session or free training session. People who have paid for the advanced coaching sessions, this particular session is not going to be counted in as one of your credits. So that's good news, right? So full disclosure, this is purely for financial education and not for solicitation or advice. Now, one other thing I do want to add, which I was thinking about over the weekend, options are very risky business. And when market gets volatile, which they always do at certain points, and through the volatility, we still manage to survive and make money. And you all know that because you're looking at my real-time Twitter feed. You know the few selective stocks we're making money on and what we're doing. So options are risky business. So keep it in mind that if you think that this is your get-rich-quick scheme, well, this ain't the service you need to be on. Just want to be very clear on that. I am very good with US financial markets. Here's the problem. I do not control the markets. Okay? I show the levels, I show predictive analytics on where stocks might go, where markets might go, all kinds of stuff, all my beautiful multiple screens, all that good things, and a few brain cells that I have left, but I don't control the markets. So if you think that you're going to make money every single day, and I've said this hundreds of times, and I'm going to keep on saying this forever, if you think that you're going to make money every single day in the market, well, you're in some la-la land. Maybe you should go, live in Kim Kardashian's basement. All right? Because that's la-la land. We live in the real world. We are hardworking capitalists. We believe in America. We believe in American business. We particularly don't give a crap about American politics as long as American politics doesn't mess around with American business and American jobs, American education and such. And I know all of you feel the same way. Okay? It doesn't matter what stripes, colors, race or religion or political party you're affiliated with. Just want to be very clear about that. All right? Here's the good news. That the tools that I offer and the resources that I offer are very effective. Now, the process of learning position management, the process of taking profits along the way, the process of cutting a little bit of the losses but not panicking and diving into the abyss and despair and all that stuff, and the technical charts and the technical indicators that I deliver is bar none, no question about it, the best. Because I and many of you who have been with us for a while and have taken the advanced coaching sessions and have sat on these type of free training webinars know very well we do not look at just price and volume. We look at the market as a matrix with lots of moving parts. I'm not here, as I've said before a couple of times, to make you a PhD in macroeconomics or econometrics or some technical genius. I am simply trying to share things that have worked for me over the years. And I do have a very strong background. I did work almost 14 years on Wall Street. So unless I was completely drunk out of my friggin' mind those 14 years, and I did pretty damn well. Okay? And I wasn't a trader there. I was in research, institutional management, and sales. But we didn't sell garbage. We sold real stuff to very high net worth individuals and institutions, which are companies, pension funds, small pension funds, and stuff like that. So I do have some knowledge. So the biggest problem with what all of you have, without you having to tell me, okay, is the actual management of the money. Because we're not dealing with paper money here. We are dealing with actual money. And none of us, I believe, well, I'm sure some of my members are trust fund babies. Well, we are not babies because a bunch of us, we have actual kids who are like older. All right. And some of you are actually having babies. Well, that's where your life starts. Because what we do is not for ourselves. What we do is for our families. That's what I think. Maybe some people have different opinions. Or people who are looking to start families. Or people who don't even care about families. Well, go ahead. Spend the money on yourself. The biggest problem, especially when markets get a little topsy-turvy, for different complicated reasons. In the particular case, in the past 2 weeks, treasury bond yields rising, which I've explained many times. Okay? That puts pressure on high growth companies. Emotional fear in the form of institutions, and all of you included, retail human traders. Just looking at price and volume, looking at the volatility, saying, oh man, this is it. It's all over. It ain't all over. It ain't all over till the credit markets crack. Why don't you Google that? What I said. Okay? Learn on your own, because I can't, this is not a $40,000, $50,000 class at Princeton or Harvard Business School. This is Clueless A Trading, who comes from a pretty damn good educational background. Okay? Boston University and Babson College, two of the best schools in Boston. All right? And I wasn't some nerd. I just loved economics and finance. So I'm not here, you guys are paying that 70, 90 bucks a month to learn a lot. And I give a lot. But the question is, do you have the capacity to absorb? I am big into behavioral finance, as you all know. Some of you have talked to me directly. You know my passion, how I talk. Sometimes I'm a little too direct. Sometimes I piss people off. But I don't care, because I'm trying to help. But help doesn't mean that I'm going to make all of you welfare traders. Help doesn't mean that I have to walk you through every single trade, every single day, every single minute. I want you all to be independent. That's what the essence of capitalism is all about. To make your own money, but getting the right resources and the tools, and in real life, the right education, hard work, a couple of lucky breaks. We need lucky breaks in the market. Of course we do. All right? Futures are going nuts right now. So I just want to start this session by saying that. I'm a pretty straightforward guy. I'm straight in the face kind of guy. Have a thick skin. Not because of me. Have a thick skin because of the market. Have crocodile skin. You want to be a little minnow? Want to be a little goldfish? You're dead in this market, or any market for that matter. This is not a walk in the park. This is not saying the same things. Grandpa's old market from 5, 10 years ago. The same old stuff. Oh, this level broke. Oh, everything's gone. No, there's a lot of mechanics involved, because this market is 90%, not 80%. I'll move it up one notch more. It is 90% algorithmic high frequency trading, what we call algo HFT, black box supercomputers running at 100,000th of a second, moving trades. And those programs are written by a plethora of very smart kids who have no idea about the stock market, who work and get paid $500,000 a year to start because they are smart. Remember, we're not smart. We're trying to make money of the smart people. And I try to read the messages as much as I could. If I was directed the right way when I was in college, I'd probably be one of those guys, making $20 million a year, 30 million, 100 million at Google. Exactly. Do I regret about that? No. Just like stocks, it ain't where you're coming from, it's where you are going. This is the best business in the world. Beyond real estate, beyond owning companies, whatever. You know why? In my opinion, this is my opinion, because you're not holding inventory. You can sell something in 1 second and it's gone. You could have a profit of 5,000. You could have a profit of 50,000. You could have a profit of 500. You could have a profit of $50 and you can sell it. Click, gone. You could buy GameStop on a rush, on a mania at 65, 70 bucks, like we told people to buy, and it goes to 200 after hours. Tell me what other business. And you can say, click, I'm gone. So the two things, the couple of things, and I don't know, 2 or 3 things, whatever. Who said that? Robert De Niro? 1 thing, 2 things, 3 things, right? The New York Mafia guy said that. I got 1 thing. I got 2 things. All right. Here's a couple of things in all seriousness. You guys need to be far more focused. I mean, all of you. And everyone else is going to listen to this. You need to be far more focused. How are you going to change your mindset about the market and stuff? That depends on how you look at the market, whether you look at the market as, like I said, as a price and volume movement, as algos moving around, making your mind mush. How many feedbacks have I got from people who said, you know what, I almost gave up? And I've been getting this for months, okay? I almost gave up, but I stuck to it, looked at the charts, and I said, you know what, VIX is doing this, blah, blah, blah. You're putting this stuff through. And I worked very hard during the day, especially during rough days. It exhausts me mentally. I would love to be a solo trader, not having to feed stuff to people. But I have a responsibility, and that responsibility is that I run a service. So how many people have said, you know what? Then I held on, I bought a little bit of lows, and look at me right now, like I'm feeling so good. Great. That's the way you got to do it. Look, there are great services out there. Okay? And everyone has their own style, their own method. But and I monitor a lot of them. I've been with services in years past who have actually taught me a whole bunch of stuff. Okay? But I don't see anything really unique about them. They're always like talking about the same things. Oh, this level broke, it's all over. There's nothing really unique. There's nothing predictive. Like what might happen. The most of them say the same thing. Trade what you see. Okay. So if I saw that a big slab of frigging rock was going to fall as I'm driving up to my favorite spot in upstate New York from 5 miles away, I'm seeing that? No. It's how you predict what might happen because you're seeing the weather, blah, blah, blah. You know that patch is not good. And how you react to that situation. Is the rock going to fall on your car? Are you going to slow down a little bit? Change the gears? Well, I love, manual gears. But anyway, I mean, everything's automatic now, right? So are you going to slow down a little bit around that curve? Are you going to rush into it so the rock falls on you? That's called position management. And that doesn't come naturally. It has to be learned. Some people pick it up quickly. Some people, it takes a long time. That's it. That's my 2 cents. All right. That's my Donald speech that he's giving tonight. Except mine runs off actual charts. Are we all together? Omar, can you hear us?
Yes.
There you go. Everyone say hello to Omar. He's all the way here in Saudi Arabia, right?
Yeah, right.
God bless you, man. Fantastic. All the way. So what time is it there right now?
2:30 a.m.
Oh man, great. And he's in the financial business, by the way. So everyone say hello to Omar. He just joined us recently, and very proud of him. Very proud of him. He did really well on Airbnb. I put the feedback up on Airbnb. And trust me, Airbnb is going a lot higher. So great, and everyone else is from right here. Okay, all right. So what was I going to talk about?
Thank you, guys.
No problem. You know, Omar, yeah, fantastic. All right, good. Here's what a naked chart looks like. Now, before I go any further, because I've spoken a lot over the last 15 minutes or so, I need you to guys. I'm going to open this as an open forum. We're going to look. You know, we're going to pull in some actual real-time trade tweets, alerts, charts, and stuff from the Twitter feed, right? From the Twitter feed, and I want you guys to ask questions because my job, this being an open forum, I would like to explain certain things, like the guy, Al Pacino said, "You want me to explain things? Okay, I'll explain things, Scarface. All right, I'll explain to you, but you don't understand. I'm going to shoot you. All right, just kidding. So I'm like in that mode right now, right? So so we're gonna look at that and pretty much, hopefully, any questions you have, I'll hopefully answer it intelligently. And oh wow, futures are up 21. I love it, man. I mean, I expected a drop, to be honest with you, but things are extremely oversold, as you know from my repeated Twitter feeds. So before I open up the open forum, my friends, and I'm so happy that most of you are here today, gets me going because I still have to do a 9 p.m. webinar for the rest of the crowd. Okay, so it's good. An active mind is good. I'd like to ask one simple question. Did you guys and gals get a chance, especially the ones who, you know, not like Allison who just rejoined back today after a bunch of years, welcome. Go through the Twitter feed over the past couple of days, Friday, whatever. Do you guys actually see what I put out there? Do you have a quick 30 seconds to read it? Doesn't matter whether you fully understand it or not. Are you guys and gals all looking at it? Yes or no?
Yes.
Yes, sir.
Don't call me sir, man. The only person who can call me sir is the Queen of England. Basically knights me sir, clueless. Okay, I'm just kidding. Seriously, just call me Frank. So good. That's great. Because the more you look at things, the more it starts to talk to you. Believe me, it does. You know, it's like art appreciation. The more you look at art, and then you read up a little background, what the artist was, what his history was, and this and that, and you understand it. So technical charts are basically works of art, and they are better works of art because of all the different constructions and stuff that I do over it. But you have to know like why these arrows mean something, but then I put the little comments and this and that. Well, it's the same old story. So please prepare a quick question or two, each of you. I'll be back in about 3 minutes. It's been raining like crazy, and that's the reason why I was delayed, because my dogs refuse to not go out. It's a double negative, and I was soaked. That should change. So I just have to take care of one of them. Prepare the questions. I'll be back, and then we get into it. This, my friends, is the ultimate contrarian, opposite, what they say, canary in the coal mine. I'm sure all of you know what it means. It means back in the days, in the 1800s, 1700s, 1600s, even the 1900s, early 1900s, coal miners, who have the most dangerous job in the world, had a cage with a canary, the bird, the cute bird. And when the canary choked and died, they knew there was very dangerous gases up front and they shouldn't go in there. Right? Very sad, but true. Canary in the coal mine. So the VIX is exactly the same way. It is the ultimate canary in the coal mine. Can give you short-term as well as intermediate term and sometimes longer term signals of where the markets can go. But for traders, this 1 hour chart, the VIX 1 hour chart, which I show repeatedly, and many of you understand that too, works exactly opposite. And I can predict based on these candles, what the market will do over the next 15 to 20, 30 minutes. And if they're hitting these hugely overbought levels, whether or not the market has reached a short-term bottom during the day. When the rest of the other traders, non-clueless A traders, and everyone out there is like, oh, it's all over. When it's down 300, 400, the price doesn't matter. What is the VIX doing? Is the VIX pushing itself up towards 40, or is it hitting those pre-structured, which I shown before the fact, not after the fact, as you all know, levels where it's going to bounce from? I mean, where it's going to fall from, or where it's going to bounce from. So please prepare the questions. I'll be back in literally a minute and a half. Yes, I'm back. I was a little over a minute and a half. I do apologize for that. So let me start off from the list. Allison, can you hear us? Do you have a question? Please feel free to ask any question you want, whether it's a stock or the markets, whatever. This is your session, and I'll do my best job. Allison? Okay, I think she typed in. Just along for the ride. Okay, good. No problem. Great. Thank you. Chris? Question, please.
I don't got anything for right now.
No problem. Nothing comes to mind, like anything. We'll always loop back. No problem. Mike the Machine, love the handle. Eminem, baby, Eminem.
Yeah.
Mike the Machine. Yes, Mike. Is this Mike Herrera?
Yeah, it's Mike Herrera.
All the way in, where are you, in Czechoslovakia?
Slovakia.
In Slovakia, that's right, because the
That's
Czech Republic
Central.
and the Slovakian Republic split up in the 80s, right? Or 90s,
Yeah.
right? And
Yeah.
you are an American helicopter technician out there, right?
Yes.
God bless you, man. God bless you. Military or civil?
It's military aircraft, but it's like a civil program now. So
Okay.
it's
I know
kind
you.
of,
I know you can't say much, so that's great. So just take me up for a ride one day.
yeah.
All right. So Mike, shoot out a question, please.
Okay. Well, kind of like do all the RSI, does that apply the same as just the regular stock on this VIX? So like under 30.
Stop.
Does that mean that the market's gonna?
Stop. Fantastic question. That's why I stopped you. Yes, it does, sir. Yes, it does. Very simply, let me just try to get very good question. 1 second. Where's the drawing tools? There we go. Pen. Change the color. Yes. Severely overbought on a triple top, regardless of what the markets were doing. Don't forget, the markets were jumping hard till like 230, whatever the Dow was. The Nasdaq still opened, ended pretty good. The Dow ended down 469 points, 470 points. At one point, it was only down 300. One of the main reasons behind that, before I get into your answer to your question, is because it was the month end. It was February month end, and there was a lot of pension fund rebalancing going on. Remember, the biggest money holders and the 800-pound gorillas in the US stock markets are not hedge funds. Hedge funds are nothing. They're small compared to the money. The biggest ones are mutual funds, pension funds, state pension funds, like the teachers retirement program, like CalPERS, California, the California State Workers Program, Massachusetts, all the big, because all state workers automatically pay into their 401ks. So those guys did some rebalancing on the big cap Dow stocks. And we never know what they're doing till at what time. They're not announcing it. And when they move, it's a seismic shift, like 10 billion, 20 billion, $100 billion worth of money. And that's why the Dow was down. The NASDAQ got bought nicely. The Russell 2000 got bought nicely, which was good. So coming back to your question, yes. And if you go through my Twitter feed, which itself is like a self-tutorial, you will see, and these are the structures. Remember, the naked chart is just all candles. It's not going to tell you much. It's going to tell you a lot, but it's all the structures that I draw. The top, the support, and each of them follows a technical pattern. This, for example, is a inverse head and shoulder, just like a stock breaking out, except when a VIX breaks out, markets drop. Exactly. Okay, so here's your main support. I put a little arrow here, Put a little This was the last, this line here on this inverse head and shoulder. Remember, left shoulder, right shoulder, head. This applies to stocks too in a big way. And we have played this very well repeatedly on multiple stocks. So, breaks out. Can somebody tell me? And before I go any further, let me explain one thing to you. A lot of questions that you all have is directly on my YouTube channel. Under new member intro, there are 2 playlists, new member introductory videos. I have done multiple trading webinars or just simple explanations of detailed explanations, but simply put out there, explain. And all of you, if you really want to like really manage your own money and take advantage of my suggestions and make some really serious FU money, you guys got to listen to those videos. There are about 25 to 30 videos in each playlist. And I've mentioned this hundreds of times. And you just have to listen to maybe 5 or 6 of them, or maybe 5 or 10 of them. They explain how to manage options. They explain how you need to, position manage. They explain chart patterns, the behavioral aspect of it behind why these patterns happen. These patterns just don't happen from nowhere. These patterns are determined by only one thing. Can somebody tell me what it is? I'll stick to Mike's. Mike, why do technical price patterns happen in the market?
Human psychology interaction.
That is absolutely correct. And what's the word I'm looking for, my friend? I'll give you the words: greed and fear.
Greed and fear, yeah.
Exactly, greed and fear. And greed and fear is manifested in the form of technical charts. And in this particular case, I use candlesticks. Some people use line charts. I'm like, why? Line charts give you like no information. I don't need to spend half my day like a lot of other traders do, services do, looking at level 1, level 2. Level 1, level 2, which is showing like where the movements are coming from, who's buying, who's selling, is so fast and so quick because of the manipulative, and I'll put quote unquote manipulative, they are hedge fund movements. Why am I going to completely burn the 3 brain cells I've left in my head to look at level 1 and level 2? And I look at a lot of different services and what they put out there. They're like videos of level 1. Oh, they're watching level 1, level 2. Yeah, are you that fast to trade level 1, level 2, which can change in either direction in literally 10 seconds? No. I rather look at the visual representation of candlesticks, which allows me to stay sane and allows me to do right. So coming down to it, multiple patterns, but yes. In this particular case, the S stock, this is the stock. This is the regular fast stochastic. That means it's going to move up and down a lot quicker during the day than the slow stock, the S stock. Now, Mike, which was a brilliant question on your part, and everyone should listen. Why is the S stock, why is the slow stochastics so critically important?
I don't know.
Okay. What happens when, and I've explained this before in simple terms, because I love like explaining things. That's what I did like all the time back in my days on Wall Street, right? To very, very smart, rich people, but who had freaking no idea about the stock markets. They had $20 million with our team and 30 million bucks, but when it came to markets, they were mush. All right, and they ran successful businesses. When you look through a microscope and you're looking through very like zoomed in, let's say you're looking at a cell. Everyone's gone to chemistry class or whatever at some point in their lives, and whatever. It's a lot of movement. It's a lot of noise. But when you zoom out, you start to see whether or not the movement or the noise is random or whether it's like something that is a little bit more understandable. It's the same thing with stock markets. When you zoom in, if you're a 5-minute, 10-minute trader, you are never going to catch A 30-point move on Airbnb in one day, if not in 2 days. The calls went from $2 to $14. Actually, they went from 65 cents to $14. So if you're zoomed in on a 5-minute chart, and which is nothing wrong with it, or a 10-minute chart, it's a lot of volatility, correct? Yes or no, Mike?
Yes.
Right. This is a 1-hour chart, and it's still showing a lot of volatility. There's a lot of 5-minute, 10-minute, 15-minute traders all over StockTwits and Instagram and other trading services. Nothing wrong with that. Sometimes we do 10, 15-minute moves and the stock moves up really fast. There's money to be made. We take it down. We move the strikes up or we sit back. Like I say in my Twitter feed, we'll re-enter. But if you're zooming out and looking to see where this might go, where it might turn from, then you're looking at the slow stochastics. The slow stochastics is the same thing as called a swing stochastic. What is a stochastic, Mike?
The RSI levels.
Exactly. You've definitely done your homework, man. No wonder you're probably one of the best technicians out there because the choppers are not crashing, man. Exactly.
Yeah, I've been
Exactly.
watching the videos.
Yes. Because you're a technical guy. That's why you're going to be a great trader. Everyone better listen to what I'm saying. I'm not trying to pump him up, but I'm just saying. Okay. So basically, the stochastics are a measure of the relative strength index. So are the MACDs, the momentum index. Now, I'm not going to sit here and explain all the basics of that. Go on Google, go on Investopedia, and figure out and read the definitions of relative strength and stuff. It's very simple. When the relative strength index or the RS of a particular stock or index is strong, that means it's going higher. When it gets its overbought, oversold levels. Overbought, oversold. Futures are up 23 right now. If this was a live chart, we would be down here right now. I put a red arrow before the fact, not after the fact. So when we bought those selective positions during the day and at the lows of the day on Friday, you're going to be cha-ching tomorrow morning if the markets open up here. If the markets open up here. Exactly. So basically the RSI, the stochastics are the second derivative or the second cousin of the relative strength index. And these charts are basically giving me an idea. And lately when the market got really volatile, so did the volatility index. So let me explain one other thing in answer to your question. It's an amazing question. Raise all drawings. Okay. I had drawn something called a megaphone. See these two lines? Right there? So this was a megaphone pattern. It was following the megaphone pattern. Every time it was falling, the markets were rising. Every time the VIX was rising, the market was falling. Remember, it is a opposite correlation. It's a negative correlation. When the VIX goes higher, this is for real beginners, all right? When the VIX goes higher, that means the markets are going lower. It started doing that, and guess what happens in a megaphone? And I've shown this on charts too. One of our biggest winners in the past 2 weeks was a company called QS, QuantumScape, which was a breakout of the megaphone pattern. Well, in this particular case, the VIX did the megaphone pattern. All of a sudden, the VIX just went nuts and hit the upper end of the megaphone, overshot, 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 and pulling back now. Now, is it going to crash all the way down here? So to answer to your, I'm going to ask you the question. If the VIX collapses from where it closed at, like 2868, that little long-tailed red thing is known, it's known as basically a dragonfly candle, but it's an inverted hammer. Long tail, red, and the body of the candle is down here. Which reminds me, please educate yourself in, all of you, in candlestick dynamics. I have one small video in my training, new member introductory on Clueless Trading YouTube channel. That's not mine. I found it. Like the guy in 6 minutes explained all these patterns like very quickly. There are guys out there with 1 million views explaining candlesticks. Please understand candlesticks, at least the basics of it. They're not going to save you a lot of money. They're going to make you shitloads of money. Okay, inverted hammer, long tail, the body of the candle is down here. What is it really saying in simple English? It's saying sellers came in hard at the same triple top level. The difference between these candles these were still, and remember, this is all happening while the VIX is on the slow stochastic, very overbought. These were green candles. These were great, but then it hit my support where the arrow was drawn and it bounced. So when the Dow was down 290, 280, or 300, boom, all of a sudden, it started to go down. Pension fund rebalancing. Except the difference between the rest of the candles and this is quite different in structure than these two. Long tail, that means more sellers came in hard. That's the reason why the E-mini futures are up 24 handles right now at 38.33. Now, what we would like to see, in answer to Mike, the machine's question, we would like to see, regardless of whether this moves up a little bit more, that means the market might, open up 150, 200 points and all of a sudden start selling, which it probably will do tomorrow. We would like to see, and this is where the mental patience and discipline comes in. This is what our Marines do when they're out there in those foreign lands fighting the bad guys in areas they don't even know. This is your reconnaissance frigging roadmap. Okay? As a sniper is looking through his scope. We would like to see the slow stows starting to bend down. Regardless of whether the market is intraday up or down, I would like to see, and this is literally 90% correct. 90% correct, technically speaking. We would like to see the slow stochastic starting to bend. And when it gets this oversold, if the slow stochastic does get oversold like this, which has happened repeatedly, and every time this has happened, the markets have gone up 500-600 points. Well, we'll go up 500-600 points. This is pure matrix, guys. This is no emotions.
Hey, Frank.
Next question. Go ahead, sir. And who is this?
This is Mike Lucas.
Yes, go ahead, Mike.
A bunch of us are just chatting here. We're not seeing a cursor, and I think we still see just a naked chart up.
Why?
I don't know.
Well, how come somebody didn't tell me that? That's weird because I showed all the whole things out there. Shit. Okay. I'm sorry. When did this start happening? A few minutes ago?
Yeah.
Because I'm looking at my thing here. You don't see the cursor either. Okay, I'm going to stop sharing screen and then I'm going to share screen again. Hold on. You see the screen, but you don't see the cursor, right? You seeing the screen?
See the screen now. I see your cursor moving around.
We can see the cursor, yeah.
Okay, great. Well, just gotta have to listen to the replay of the thing because I explained, like, as the slow stochastics. Well,
Yeah.
you heard everything I said. You know what I'm saying? Yeah, that's good. Thank you for reminding me because listen, go to meeting and stuff. These are like, huge tech companies. I don't know why they do, why some of this crap happens, but thanks for reminding me on that. All right. Okay. Miro said I was going crazy trying to figure that all out. Okay, no problem. Now you see my cursor?
Yeah, it seems to be rectified now.
Yes.
Okay, fine. Next question, please. Miro, what's your next question? Do you have a mic?
Yes, I have a mic. I was
Go
just
ahead, sir.
curious how
Go ahead, sir.
the negative divergence on MACD and stochastics works compared to the stock itself.
Same thing. The MACD divergence works, what Miro is a little bit more advanced. So what he's talking about is when a price movement happens. Let me get this out. I'm trying to find one of my charts with a MACD divergence. A MACD divergence simply means, and I always like to explain things simply, as you know, because I'm after all clueless, is when you have a price movement going up or down, but the internal indicators are going the opposite way. Now, which MACD divergence are we exactly talking about, Mike? Because I didn't really see like any major MACD divergence happening other than a few things here and there. Did you see one that you want me to cover?
Yeah, I was in your Twitter feed from last Thursday or Friday. I saw a
Okay.
line on the MACD level that looked
Yep.
like it was showing divergence.
Okay. So, like I said, a MACD divergence means like when you're looking at a stock, let's say, for example, let's put out a stock. So I've been putting a lot of VIX out there because the VIX is critical. This was not a VIX like, where it overshot like crazy. This is when people really give up. They're like, oh my God, I can't take this anymore. This is crazy, man. We're all dead, right? This is exactly when you start to see the topping process. You see the topping process. You see a long tail going over this megaphone. And believe me, my VIX charts are pretty damn correct. Believe me when I tell you that. I haven't seen anybody out there that well. And I monitor and I always give shout outs to people on StockTwits. There's a lot of smart guys in StockTwits, but nobody really won't post like a real chart of the VIX, for God's sakes. I do it once in a while. I don't even post that much on StockTwits. I got 33,000 members almost, followers. When it overshoots like this, way off the Bollinger, which is the cloud, it's always going to pull back. And that's exactly what it did. Like I showed you, that's exactly what it did. Right there. Think about it. Okay, this is what happened. Pulled back, went up, pulled back, got oversold. Remember I just explained to you the fast stochastics, which is the stock, got oversold, came down here, and right from here, it bounced. And then created this. Then created this. That's what machines do, whether you like it or not. And it's going to do this every single day. So in answer to Miro's question, Mike's question, a positive or negative divergence happens when, I'm trying to find this stock, like, hold on one
It was
second.
listed as a QQQ on February 25th.
Yeah, I don't know if I can go back that far. I know we can, but sometimes Twitter like only goes back to, February 25th, right there. Like losing track of time because of the short month. Okay, here's Feb 25th. Here's VIX, GME.
Right there.
This one, right?
Yes, you get the light on the MACD. So that's what I was asking about.
Perfect, my friend. Another fantastic question. Thank you. Can everyone see the screen, please?
Yes.
Very
Yes.
well. Let's change the color. Blue. Good. So when I put an arrow like that, thank you, Miro. When I put a thing like that, what I'm trying to show is we hit a significant bottom, whether it's this or that little very sharp long tail Remember, a long tail bounce means what in behavioral finance or behavioral trading? It means that's when they all gave up. That's when the shorts, I mean, the stops went off. Whether it's an individual trader, they have stops. And people ask me, hey, do you put stops in options? I really don't unless I have a large position, because you know what they're going to do? Because this has happened to me hundreds of times. They're going to take my options away, and then within 5 minutes, they're going to run it up big time, and I won't have the time or the energy to jump back again. So I have mental stops based on my charts. Every time you put a stop limit or a stop on a stock or an option, because you're trying to protect yourself, here's the problem that another trading service will never tell you. The problem is that once you put it out there, the algos and those bastardos, as I like using that Spanish term, right? They see it. So they're in there to screw you. They'll take it away from you. And when it turns, mentally, humans are not that capable of being strong and say, oh, I'm going to jump in again. And what else happens when you have this type of, and this is the critical support on the cues that I kept on showing repeatedly, and the market has held it. And we're going to look at the more updated chart right when we finish in a couple of minutes. This is what happens. The shorts cover. This is where the regular longs, or the people who have been holding this particular ETF or stocks, whatever, they panic. They sell that I can't take it anymore. It's all over. Okay. The shorts see it, they feel it, they get it, they cover, and then bang, the market goes up here, and then you don't get back in again, and you're like, what the F did I do? And tell me how many times you guys have all done that. Don't tell me, I know it. Now, the real pain comes in here when that movement comes, that final like boom, where the stops go off and the limits go off, and it's just like the market goes from down 400, all of a sudden it drops like whoosh, 576. It's like, oh my God. Well, instead of saying, oh my God, because God always has to be behind you as a trader, I'm a very God-fearing person, but God does not like the ones who don't believe. So if you don't believe what these levels are and why the markets have repeatedly bounced off this level, then nobody will save you. Coming back to the positive divergence, as the markets were collapsing, in fact, it actually collapsed down here at one point. The internals, in this particular case, it was the stochastics, were still showing a positive divergence. In other words, they never went down all the way down here. That's what's called a positive divergence. Now, the positive divergence necessarily is not really like a trader's tool, but it's something important to keep in mind. That means the actual selling pressure wasn't as bad as it was when everybody gave in. So that's basically what it means. And this is the actual NASDAQ. So good. Next question, please. Nobody? Okay, so I'm going to show this same chart. I'm going to show this same chart. Actually, that's not a, that's a static chart. It's not real time. But I'm going to show it on the actual S&P. Hold on, because that was a QQQ chart. QQQs are. Let me see if I have the NQ chart. Yeah, I do have the NQ chart. Okay, 1 second. It's on Thinkorswim. For some reason, investing.com does not give me the. Let me see if it gives me the NQ charts. Nope. See, doesn't give me NASDAQ futures. Okay, so doesn't matter. So let's look at Let's look at the ES 1 hour. What is going on? This is the real time, what's happening in the global markets. So this is where we are. There seems to be, and this is very important, we bounce from, pretty much. Okay, this is the month of February when it started. Huge move up, and this is that megaphone volatility, right? Which is being shown on the S&P 500 futures, which I showed you all on the VIX chart. Remember, just a few minutes ago, the VIX megaphone was trending up, and the S&P megaphone is trending down. Yes? No?
Yes.
Yes.
This is not tough stuff, trust me. Trust me. This is not tough. Don't make these things like that difficult to understand. Exactly. Now, what's happening is a novice looking at the markets doesn't quite understand, thinks that the markets are controlled by human behavior, like, oh, everyone's going to be selling, it's all bad, like this and that, and doesn't understand the technicals, forget technicals, the algo HFT, high frequency trading, supercomputers, black boxes, will look at this and say, that's it, it's all over, we're going down. Yeah, we could go down. But as traders, we try to make money on both the intraday movements and the multi-day movements. And we look at the internals. Most of the times we are right. Sometimes we get ambushed. There's nothing we can do about it. So what is happening here, if you notice, and I'm going to adjust this this particular chart right there. These are downtrend lines. So what's happening here is what we call a cluster. This happens with stocks too, but it happens a lot more with indices, with the actual indices, right? S&P, NASDAQ, and all that stuff. What is happening here? In simple English, like, Chris, what do you think is happening here? And I'm just going to get the remote control drawing tools, because I can speak all day long on what I see, but if you guys are not absorbing at least 40% of it, then it's a waste of your time, not mine. What do you think is happening here, Chris? What do you think is happening here? What's it? Just give me a simple answer. I'm not here to give you a grade or on your answer. Just do it.
It's just that it looks like a bunch of choppiness.
Correct. It's a bunch of choppiness, and it's called the volatility cluster. Okay? It's called the volatility cluster. That means, in simple English, the markets looks like it wants to hold that 3,800 level, and it's choppy, choppy, choppy in between that. And that's the broader market. So it is also called a range, and that range is 3,800, and the upper end is 3,851. 50 points on the E-minis or the S&P is roughly what on the Dow Jones Industrial Average? I've mentioned this a lot. Come on, guys.
Like
One,
6 to
let
1.
me,
100
huh?
points.
Okay. Let me explain this. I've said this like hundreds of times. If you guys don't understand this, please never trade options. Seriously, don't trade options. Because it's very simple. A 5-year-old kid, a 4-year-old kid, my kid at 3 was doing frigging math, and I was like, shit, no wonder he was so good at math. Well, that came kind of like, not from me, believe me, from his granddad. One S&P point move or E-mini point move is how translates into what's the conversion rate to the Dow Jones Industrial Average, which is the most widely followed index. One S&P point move translates into what on the Dow Jones Industrial Average?
Is it 8?
It's about 6 to 7. That's what I look at it. Who said that?
Nero?
Okay, so a 50 handle move on this volatility cluster and this range means the markets, what is the range trading on the market right now as we get into the first part of the week? This is 50, right? 3,800 to 3,860, whatever, roughly 50 points. How much is that into, according to what you correctly answered on the Dow Jones Industrial Average?
350 points roughly or so.
That is right, sir. Between 300 to 400 points. So as predictive traders, we are basically looking at this and saying, okay, we can handle 300 to 400 points. And God help us, if it breaks out, then we know what the other levels are, which have already been drawn. And if it goes here and does the same thing, that means back and forth. So the world never ends. The machines never cease because they have predetermined levels they're going to move in between. That's called the matrix. Now, if other than Miro, none of you knew that answer, which was explained like hundreds of times, I highly suggest that you do not trade options or stocks for that matter. You think I'm laughing? I'm a little bit disappointed. Don't know a basic conversion between the S&P 500 E-minis, which is the ultimate determining factor in the market, and the ultimate big boy Dow Jones Industrial Average, then we have a problem. We have a problem, Houston. Now, this is where we are. Futures are really ramping. Now, where are they going to ramp to? I already know they're going to ramp to probably here. And everyone's going to get super excited. Like, oh, markets are going higher. No, they're not. They're just trading in a frigging range. The reaction on the markets at this point will determine what the forward move is. And more importantly, the internals. The internals. If the internals get overbought, and I've been saying this forever, when the internals overbought, and this is the 1 hour chart, this is the trader's friend. It gets this overbought, there's a good probability, not a definite probability, that they're going to pull back. And the pullback means we're going to be back down another 200 to 300 points for no reason. And some of you, I mean, not you guys, but the rest of the world is, oh my God, it's all over. All right, enough of the markets and stuff. Now let's look at some stocks, like powerful patterns. All right, so let's look at Airbnb. And I'm going to switch the screen now. Let me know. Any other questions from anybody else, please? Feel free to ask, All right, let's switch over to stocks. Let me change my screen. Let me see here. Screens are changing right now, so I'm moving to my other screen. And should be on. Done. Guys are on?
Yeah, I see it.
There you go.
Yes.
Okay. Now, that's a serious megaphone. Now, this is not the first time this chart was drawn like weeks ago. It's Airbnb. There are fundamental reasons why the stock is going higher. There are technical reasons why the stock is going higher. So look what the hedge funds do, just so you all understand. Like I said, 1 + 1 doesn't equal 2 when it comes to trading or trading options or the stock market. Any of your other trading services and other people you follow, and very smart people, mind you, I don't disrespect anyone. I've learned from many, but I've developed my own unique style. Tell you that 1 + 1 = 2 is all bullshit. Okay? Complete BS. Charts alone can probably give you the best rate of return on your trading and overall investments in stocks than anything else. When markets go completely nutty and volatile over a short period of time for different reasons, like I said, every crisis is the same for different reasons, then technicals go out the window. But at least we know where we can drop to, like what we can do. So look at this chart. There are multiple things happening here. They took the stock. Here was the level that line was drawn, the 208.51. This is the daily chart. This is for swing traders, the ones who don't want to necessarily deal with this stock on a daily basis. And I have many members who are like that. And new members who ask the question, are you a day trader? No, I'm not a day trader. I'm a combination of a day trader, but mostly a swing trader because I'm more predictive. You want to be a day trader? Well, you better be fast. You better be quick. And you better have, you know what, okay? Because these machines will day trade and mentally trade you to the point where your brain is mush. So you better be quick. Day trading is very profitable, but most traders are not equipped to be day traders. And if you're a day trader, get ready to make a $50 to $100 on the thing. Fine, that's fine. You want to make the real money? It's about swing trading. And even swing trading gets lopsided when things go volatile. I speak the truth, not some political garbage. So look at this chart here. Very simple terms. Let me get the drawing tool. This is one of the most powerful charts that I've been showing for a while now, like for a couple of weeks. You got a megaphone, which is also an uptrend line. What did the stock do? Let me get the drawing tool. Hold on one second. There are a lot of ways to skin the cat as I'm setting this up, okay? I have members from years ago when we started who don't give a crap about my technicals, but they understand my charts. And they got really rich, like really rich. Some of them are like serious players. They're like, Frank, I don't give a crap about your stochastics and all this thing, but they understand it. So they blindly just say, okay, I'm buying this, you know, they sit on things, or if something goes nuts, like some of the small cap stocks, they'll take profits out. One guy had like 30,000 shares of SOS. Stock went up how much? From 6 to frigging 15. Just imagine how much he made in 24 hours. She's like, I don't care about technicals. I'm just looking at the stuff you're putting out there. I'm looking at the charts, but they're kind of getting it. So remember one thing, you don't need to be a freaking technical genius, but you need to understand how to manage your brain cells. Most humans are weak. They're weak. They talk big. They all want to be the big shot, big kahuna. Comes to the market, they're weeping. They're weeping. They're changing diapers every 10 minutes. The market will make grown men and women cry. The market is the most formidable opponent you will ever meet. Exactly. Doesn't matter whether you're like freaking the biggest gym guy or the most fit woman or you run 40-mile marathons, you know. The market will make you cry. Believe me, I know. So I just try to help so it doesn't make you cry too much. Here we go. You got a megaphone pattern. The stock eventually is going to go to 290. And I don't mean that long. This is the ultimate reopening trade. I don't want to give you a fundamental analysis. I've already given that on previous webinars. What do we have here? We have a W pattern. A W pattern moves up to 220. Options move fast. Options in BNB at one point were 65 cents to $1. When the hedge funds took it up to 200, they banged it down. What did it do? They couldn't break my lower megaphone. 180, 181. Boom. Earnings came out. Stock went up immediately. Within 10 minutes, they shot it down from 197 or 194 down to 185. Like, whoa. That's what hedge funds do. You think they're your lovely, BFF or whatever? No, they want you out. What did they do after that? They jammed it up. Markets were down. Airbnb going nuts. Did it go up in a straight line? No, it didn't. I sold a bunch of options. I even put it out there. And the small remaining amount went up to 214. I said, okay, I'll hold it because nothing changed in the picture. Technical discipline. Am I going to be bummed because if the stock doesn't open up at 240 and 215 tomorrow? No, because this chart is telling me that I am destined for 220 on a technical level with futures right now up 27 points. And NASDAQ futures are up. NQs are up 105, which I mentioned on previous webinars a bunch of times, that the biggest reflex rally will happen in big cap techs, which were slaughtered for no reason. You don't have to believe me. Well, I'm clueless, man. I know nothing. But look at this chart. 220, they'll be selling. Maybe they'll bring it down like 5-6 points. This stock moves fast, and there's not that much stock out there. Look at the volume. The earnings were fantastic. Look at what's happening with the stochastics, just about to cross. Once it crosses, see you later. What's happening with the McClellan oscillator? Oversold. Even though the stock at one point was up $30 on a bad day in the market. Well, NASDAQ did good. What happened to the MACD? It's turning. If you have patience, you made a crap load of money on this. You not could have, will. This is the picture going into spring. As the airlines reopen, as they're doing fantastic, we did very well in UL, CCL, Carnival Cruise Lines, RCL, Disney. What are people going to do? Oh, I'm going to be cooped up in the middle of Texas, in the middle of New Jersey. No, you want to do an Airbnb quick vacation somewhere. Stay in a nice place. Except these guys made money while the COVID-19 crap was going on. Powerful, long-term picture, 290, 300. Short-term, you got 10, 15 points that you can trade. Told you guys to buy it here, told you guys to buy it here, told you guys to buy it here, told you guys to buy it here. Going back to the first part, yep, all listed. Here's your major resistance. What's the problem? Any questions? Any questions? Are you guys still there?
Still here, Frank.
Yeah, I'm
Well,
here. Yeah, no questions.
everyone got shit scared, you know? Well, let me ask you a question, all of you. And please feel free not to answer, which would make me very happy. Who made some serious money or Airbnb? I know who did because they DM'd me. Who bought the calls at $2 or $3, looked at the chart and say, I'm sticking with this. Fundamentals look good. Technical looks amazing. Earnings were good. Who did? Nobody. Love it. That means the stock can go higher. Exactly. Not a peep out of anybody.
I got some, Frank.
No, yeah, Mike Lucas. Yeah, exactly. And this stock, like I'm showing you what it can do. So what I'm showing, and remember, I'm not your enemy. I'm in the same boat as you guys are. But I'm trying to wake you all up a little bit. When you stop and complain, oh, I'm buying Apple. What the fuck are you buying Apple for right now? Yeah, Apple will go higher, but that's not where the money's going. The money's going to DraftKings. The money's going to United Airlines. The money's going into Snap. The money's going into Airbnb. The money's going into Boeing, even though it was down like, you know, on one level. The money's, believe it or not, for the gamblers are going into GameStop. And people are like, some people are like, oh, I'm buying Apple and this and that. Like, okay, good luck. It's your problem, not mine. We ain't Warren Buffett's, all right? Look at a simple stock with options go from 50 cents to like $1, like $1.50. Then they pull back a little bit. Look at UAL. Dude, people are not going to fly. Come on, guys. I say I'm in the business of using my capital that I have both as long-term and short-term. Short-term is the trading part. The long-term stuff, I have a whole bunch of different stocks, biotechs and stuff, great names, which have gone up. I don't even touch them. But if you really want to make some serious money on a short-term basis, Take a look at stocks like this. What's so difficult to understand about United Airlines? That we told you guys to buy it around 40, 42, around here. Okay, hit my downtrend line exactly. I didn't just draw this in front of you right now. What's my upper channel showing? $70. Yeah, the stock will go to 70. I don't even know where the options are going to go because it's going to be too big for me to comprehend where we are. There's nothing wrong with this chart. Somebody will say, oh, the daily's really overbought. Okay, want to show you the weekly? It just started. Here's your 50 fib. Remember, on a massive extreme correction, and this one particularly because of COVID-19 and airlines dropping, 50% fib is 57.86. Every dollar move on a stock like United Airlines makes you money, like real money. And this is fantastic. It's a cup and handle. I don't get it. I don't get what some of you are doing, honestly. I don't want to get, I really don't care. I really don't care. I really don't care what you guys do. I mean that. I do care when you guys do well. And the reason I don't care what you guys do, because it hit my downtrend line exactly, is because you ain't paying my bills. You believe me or not? And I'm being really straightforward in your face. That $70, $90 a month is not going to save me, and I ain't a welfare trader. But you look at charts like this, and you sit back and ask people A and B. One person says, yeah, I bought it. And they made money. Like, what? Okay, fine. All right. Let's look at, there's so many others, Let's look at Apple. Apple's not done going down yet. And I love Apple as a company. You got the weekly. Let's look at the daily. Daily might look a lot better, actually. The daily is actually starting to bottom. So we are at that phase here between 120 and the gap fill on Apple is 107. I'm not that bearish on Apple. I think the stock pretty much bounces from this level. But if you look at this particular chart, it's not something you'd be buying and trying to trade and make money over the last week or so. I would be a severe, it's testing the 200-day moving average. Look at that. I'm sorry, that's the 150-day moving average right there. Right there. This is the trader's line, the yellow line. It's the 5-day moving average. Like you want to make Apple money on a short term? You want to buy this line when it's just starting to turn. Look at Apple's MACD. This is one of the reasons the big cap growth stocks, because there are some big hedge funds, including, who was that? Recently, they sold a whole bunch of Apple. Oh yeah, ARK, Kathy Wood. They sold Amazon and Apple. You notice, like, I don't mention Amazon and Apple right now. Yeah, if you're a fast day trader, you can wake up one morning, Amazon's up 40, like, okay, take the profit. Sure, but ask yourself if you're that quick. Everyone can drive a 200 horsepower car. How many people can drive a 700 horsepower car? That's day trading in volatile markets. Ask yourself that. Are you equipped to drive a supercar? Or are you going to be wrapped around a tree in 10 minutes? Exactly. So Apple doesn't excite me, even though it'll probably be up $4 tomorrow because NASDAQ futures are flying. And this candle will probably look different. If I see a nice bullish candle like this, which was on the 23rd, right there, nice long tail reversal hammer, tomorrow, I'm getting in there. Because then it's going to go over my 125.82 mark. And then I am looking at the previous inflection level at around 130. Because Apple moves in increments of round numbers. All right. It's 7:33. I literally got an hour and a half for my next session. Please ask me a direct in-the-face question, and I'm more than happy to answer, ladies and gentlemen. Mike, ML, Omar, ask me a question on some small stock that went up. Oh, DraftKings. I gotta show this. Yeah. No, go ahead. Ask me, please. Let me just show DraftKings and then you ask me. I know. Sorry, I keep interrupting. I'm like Donald, when people start to talk to him, he keeps on interrupting. Right? There you go. So I do apologize for that. I'm a New Yorker, man. We got the same characteristics. We just want to put our point through and like shut the hell up, everybody else. So all right. DraftKings chart looks fantastic. And these machinations by these manipulations by these hedge funds piss the shit out of me sometimes. Like I'm up at 61, I sell a little bit. Looks like it's going to go to 64. Bang! They move it down for no reason. For no reason. But the overall chart is fantastic. I believe that the stock is going to get hit 64 again. The high was 64.78. If I look at my channels, it's a $70 stock. This is a serious company. Everybody's opening up online betting, including Canada, New Jersey. Other states are opening. New York is considering opening up in a big way. Texas is looking to open up because it's great revenues, great taxes. I like the stock a lot. It's a day trading stock as well as a swing trading stock. And on top of that, it is let me see. Oh, I still got the other one. It is, if you just smooth it out, it is a beautiful cup and handle. These are the type of swing trades I like. Day trades too. It'll move $2 or $3. Options move up nicely, 40, 50, 60%, sometimes a little bit more. You can scalp. Right now, given the condition of the market, futures are up 30. Wow. Okay. We are looking at 65. That's very nice. A 4-point move on this is more than double your money. And if it breaks out if it breaks out, there's going to be, like they say, a stock making a new high generally tends to make another new high because new buyers come in, shorts cover. Then you're looking at $67.5, $70. This one stock alone, in my opinion, based on its fundamentals, based on what's happening with the US economy, based on the prospects of the gaming business, which is not 1 trillion, it's like a $200 billion business, like 5 years down the road. That's what the big shots say. Can change your account. Okay, so what was the question? Who was asking?
Do you think Nvidia is going to bounce back?
Of course it's going to bounce
Question.
back.
Yeah.
Of course it's going to bounce back. So let's look at NVIDIA. Of course it's going to bounce back. NVIDIA is a beast. And NVIDIA was completely manipulated. The numbers were fantastic. We did very well in NVIDIA till the earnings, and then the stock went down. Okay. But NVIDIA is, technically speaking, not broken. NVIDIA was a victim of the so-called reallocation out of large cap growth stocks, like Apple was a victim of that. But NVIDIA is a different cut from a different cloth. NVIDIA is in every single future technology that anybody's can ever think of. Artificial intelligence, autonomous cars, gaming, crypto, you name it. So looking at all that stuff, and Jensen Huang was great. I think NVIDIA is in a very solid buying point. Both on a short-term basis, you'll get volatility because I don't know what's happening with this pension fund rebalancing or whatever, okay, but it's happening. NVIDIA is a screaming buy at 523.42. NVIDIA is still within this structure. Can somebody tell me what that is? And this is from back in August. What is this? What is this pattern called?
Rising wedge.
Sending wedge.
A rising wedge is this.
Okay.
When it's a flat top, what is it? I know you know the answer.
Ascending triangle.
Thank you very much. Thank you very much. It's an ascending triangle. So NVIDIA is in a wide band. You know, it's like a trading stock because it trades like between 550, as I've mentioned many times before, and 500. You can trade this baby for 50 points. It's now just hugging the upper end of that move. Don't forget, the stock went to 614 the day before, and we took some nice profits. We left a little bit in there on the 620 calls, which are still running, but they got hit. What was the reason for NVIDIA to pull back? Nothing, just complete manipulation. So ascending triangle is still valid. Ascending triangle is between 510, very wide range, by the way. Remember, always one thing before I end the session. Everybody likes to think really like long-term swings, this and that, except they forget that we ain't running a mutual fund here. You're not running billions of dollars. Maybe your portfolio is $1 million plus. And if your portfolio is $1 million plus, you better have a very small amount in options just for the boost, the octane, the nitrous to get that car on the racetrack. All right? And the rest of it should be spread out nicely, and a good portion should be in cash. But traders like to think of themselves as like, oh man, this is gonna go here, blah blah blah. Well, how are you gonna feed your family, your dogs, your cats, your whatever you have, all right, on a short-term basis with the prospect of where a stock can go? Remember, this is my living. I treat it like a business. Long-term portfolio, short-term trading. So that's the problem. You have to mentally calibrate to understand that you can make a lot of money on short-term trading through volatility and everything, even though you're gonna have some really crappy days where you want to jump off your chair. If you do, guys, decide get really depressed, don't jump off the first floor window. Just jump off your chair and fall on the floor, okay? That's serious. So Nvidia is it's a trading stock as well as a long-term stock. I still believe Nvidia will eclipse 600. Absolutely. I've mentioned in my previous webinars, we're going to moderate the temperature on the technology side with China. It's going to happen. Keep your own personal politics aside. As long as American business has strong earnings growth, and what makes America great, again, I don't want to be a preacher here, but I'll tell you one thing. Putting aside the Democratic, the Republican, the GOP, and the hardcore extreme right-wing and left-wing frigging politics, I don't give a shit about any of them, honestly. I give a crap about American business, because American business is what makes America stand. You want to piss on American business? I know some people, oh, American business is like the cancel culture, blah, blah, blah. Good. Shut down all of American business. Shut down Silicon Valley and become a third and a fourth world country in one day. Our military, our fine military, our great technologies, our healthcare, our status in this global network of nations is dependent on American business, and specifically the growth sectors. Exactly. So you want to shut them down? Sure, go ahead. Let's all move to, Rwanda or Congo or something. Somebody's going to piss on me and say, oh, why did you say Congo? Yeah, let's go move in the jungles, all right? That's not me. I respect American business. I think our business leaders are fantastic. I think they want to see America prosper. And this stock is one of the finest examples of that. And the last one that I'm going to show is Amazon. Great company. Great company. And the stock is pretty much doing nothing lately. Now you can day trade the stock, mind you. You can day trade the stock. So what this stock is really doing, it's trading within it's like on a very wide range. And that range is basically 3,000. Mid-range is 3132. That's 130 points. As a trader, you can make money off these moves, mind you. Okay, 3364. $2,900, which we haven't seen since September. Like, so if you look at the chart, it's not like, oh my God, I really want to scream and buy it. But then you look at the internals, you're like, man, they're getting really oversold. In one single flip, You get one announcement out of Amazon that they're spinning off AWS, which is their biggest money maker, Amazon Web Services. Amazon doesn't make money off selling us great stuff, which arrives in like 3 minutes, right? They lose money on that stuff. Amazon Web Services, and they spinning it off, or they're doing something with it on an M&A, mergers and acquisition level, the stock will be up $150 in a second. Is it a screaming buy? What do I know? Looking at the chart, no, not yet. At 30.21, absolutely. Do I want Amazon to go higher to propel the big cap techs higher? Absolutely, because it's part of NASDAQ. Netflix, showing you some of the fangs. This is your daily chart on Netflix. Okay, it's a lot better looking. It's a lot better looking. A lot of these lines were drawn a while ago, so I'm just going to adjust it a little bit more. Netflix, between 520, 525. It's holding the 50-day moving average very nicely. It's good. It's good. But I like the new generation of stocks that I put out there. The ones that are out there, like the Airbnbs, like MGNI, even Shopify, BigCommerce, which hasn't even started its journey. Things like, Snap, which I think, will get bought out. Square is good. So that's it. All right, guys. I'm setting the regular session up for, but you guys heard a lot of it anyway. But if you do want to attend, it's at 9 p.m. I appreciate you guys being here. Any other last questions I can answer? Nobody? Yes, no? Okay. Last point that I want to make. People can hear me, right?
Yes.
Yes.
Yeah. So I was so amazingly freaking good that you guys are like deadly silent. I love it. I'm just kidding. But the thing is, let's not make this complicated. We've got to deal with volatility. Futures are up, like going nuts right now, up 30 points. Means nothing because I just showed you the range. Okay. So just follow my charts. Don't ever worship anybody. All right. Nobody's God in this market. But technically, we're pretty damn good. And we'll teach you a lot of the things. But learning something and not applying it means nothing. Okay? You can say, yeah, I learned all that stuff. Well, apply it. And that application really comes from the mental part. Are you ready to take a risk? Now, the only way you can deal with it as a trader is if you don't plonk down everything in one go. You plonk down everything in one go, yeah, you could just overshoot. You could get one of those Airbnb type of moves, and all of a sudden your account is up 500%. But so what? You could have done the same thing, and if it went down 30 points, you'd be smashed, gone. You'd be lying on the floor drinking some cheap beer. Okay? So just try to position manage. Don't go nuts. Take profits early if you need to. It's fine. There is no 1 + 1 = 2 in this market. It's not. And there are some underlying dynamics going on because this 10-year bond that I'm watching very carefully, and I've explained it to you guys quite a bit. If this shoots up over 1.6, 1.7%, this market will be down 1,000 points for no other reason other than technical reallocation, asset reallocation between fixed income and stocks, out of stocks into fixed income. And there's nothing we can do. On that note, God bless you all. Rescue a beautiful dog. Thank God for the fact that you live in the United States of America and believe in American business. That's all. And I'll keep on doing what I do. And hopefully we'll catch some real sexy high flyers like the SOS and this and that. And I'm always looking out for them. GameStop, like I explained the other day. You could buy 5 shares and make $1,000. You don't need to be out there saying, oh my God, I'm going to lose all my money. And if you bought 100 shares, then you made so much money, it's not even funny. Exactly. All right. All right. Good night. And Allison, thanks for coming back after what, like a 2-year hiatus from us? Like, what'd you do? Lose most of your money and then come back to Clueless Day Trading? God bless you, Allison. We'll be seeing you around. Thank you. Bye-bye.